Welcome. Let's take a look now at some of the events to watch out for on Wednesday, the 31st of May. We begin in Japan, where overnight we get the release of industrial production numbers for the month of April, where expectations are for a reading of 1.5% month on month. And at the same time, retail sales as well in Japan, the consensus there is for a reading of 7% year on year. And we already know that the Japanese economy is beginning to heat up, and some sort of expression of favour coming through from consumers could well be seen at 6 o'clock in the morning UK time when we get consumer confidence in the Japanese economy as well. Let's take a look as well at what's happening overnight. We get Chinese figures out, 2:30 a.m. We get the NBS PMI data. The big news coming through from China is that we've got this weakening, or rather it's not strengthening as much as people had expected. And what's been happening here is that the Chinese currency is weakening. This is the US dollar rising against the Chinese Yuan, the offshore Yuan, CNH. We're currently trading at 709.02. Now the next line to watch out for is this high that we had here back on the 28th of November last year at 725.70, some considerable distance from where we are. But if you are long on this, your stop goes down here around about the 70 level. Just below 70 would be a good place to put your stop with a view to taking it up to that sort of high. If you see a continuation, the weakness being demonstrated by the Chinese lack of Chinese growth and the fact that China just doesn't seem to be recovering at the speed that many had anticipated at the beginning of the year. Let's move on, take a look as well as what's happening across the European markets. We get consumer prices out in France and also a final look at first quarter GDP. Now, we've been witnessing some interesting moves recently on the French CAC 40. I want to take a look at this in the context, the highs that we've seen, raising us up to these record highs that we saw back on the 21st of April, all the way up at 75.87. Since then, there's been a little bit of air taken out of the tyres, but it's not a big drop that we've seen. And indeed, if you consider there's more downside to go, one of the best ways to look at this would be to take a look at a Fibonacci, where you draw your line here from the lows up to the highs that we've seen there and work out where the next stop-off point is going to be. And you can see here that according to this, the next line of support to watch out for is a 70.87 level. We're currently trading at 72.71. So potentially there is some downside to go, which will take you to that line of support at 61.8% fib retracement if you are short on this. MACD pointing down, indicating potentially there is some more downside to come. Momentum does seem to be picking up on the downside. And if that comes to pass, then that is the line to watch out for. You get a break of that, you're on the way down to 76.4% at 69.68, which is the next line of support to watch out for in the French economy. We've got consumer prices and the final look at GDP of the first quarter out first thing tomorrow morning. And then later on in the day, staying in the Eurozone, we go to the Eurozone's largest economy with Germany. 1 p.m. we get consumer prices. We already know that the German economy is in recession, but there doesn't seem to be too much worrying investors in the German economy and indeed indices. This is the German DAX, not too far away from the highs that we've seen, which confirmed the highs we had back in January 2022 and November 2021 at 16,335, and you can see that this market has just refused to go there, but it has been supported at 15,660. This is looking a little bit stronger than the graph we've just seen for the French index. The German DAX looks a little bit more encouraging on the upside, and if you're long at this at 16,028, stop goes underneath this line down here at around about the 15,600 level if you're long on the DAX. Then at 1:30 p.m. on Wednesday, we get data out from Canada. It's the first quarter GDP growth rate. It's the final estimate for this. And just for the record, taking a look at what's happening with the dollar trading against the Canadian currency, and it's trading within this band of between 133.15 and 136.54. In the grand scheme of things, you can see it's quite happy to be within that. At the moment, we're on the way down. MACD is pointing up, but curling over. If you're short on this going into the data tomorrow at 135.79, stop goes up here at around about the 136.50 level for a stop loss if you're short on this chart. That is short dollars against Canadian dollars going into the data out tomorrow. Talking about the dollar CAD, on the other side of that pair, we got the 1:30 p.m. UK time release of the JOLTS job openings in the States. And then later on in the States, the American Petroleum Institute crude oil inventories. One final area of the market to watch out for is WH Smith trading statement, which comes out at 7 o'clock tomorrow morning. It's not a big number. Look, we are looking as though, at the moment at least, we're trying to find something to trade. And for this, I thought we'd look at what's going on with WH Smith. Now, the big move that we've seen for Smiths has been this move up from the lows we had back on the 20th of March this year to the highs, where we've seen this stock go back into bull market. It's up over 20% from the lows back on 20 March to the highs on the 16th of May. But since then, things have turned around for retail. There's a couple of things going on here. First of all is the high street and concerns about the fact that people are having less and less money in their pocket to spend. That when they go on journeys, they may no longer want necessarily to pick up and pay for a newspaper or a book or other things that would otherwise be the staple of sales at WH Smith. But certainly it's a number to watch out for. And I think it's worth looking at in the context of the overall economy here in the UK, because I think as we see interest rates go up, and there's now market pricing for more than 100 basis points of interest rate increases. That's up from 4.5% up to at least 5.5%, possibly 5.75% before we get to the top of the interest rate pattern for this part of the economic cycle. That's certainly what's been priced in now in the markets. And if we get that, a lot more people are going to find it a lot more difficult to spend any more money on things other than those that are necessary to feed your children, keep your house warm and power your car. That's WH Smith at 7 o'clock in the morning on Wednesday. Hope you can join us at 7:30 for the early morning call. We'll be covering WH Smith amongst other things as we look out towards the trading day on Wednesday.